Hello guys, and glad to have you on board again today. Plenty of stuff to talk about. Yesterday has been a hell of a volatile session for cryptocurrencies, but still, the candle close all by itself isn't worrisome at all. It's kind of a big lower shadow candle, and we even managed to close on the top 50% of the candle, even though it has gone down to more than 20% drops throughout the day. We are 30% off market tops and stuff like that, so we're going to uncover what really happened, what the underlying structure of this was, and most importantly, even though I will probably go down some shadow territory and subjective stuff, because I'll give you my conclusions, but I can hardly give you all the explanation supporting these because it would take way much longer than the time I want to spend into an intraday update. So I'll give you the conclusion, try to give you at least the core elements so you can understand just a bit of what actually is going on and why I get to those conclusions. So remember that first things first, in a global perspective, I told you into the weekly updates that my personal equilibrium level, okay, call it the buy to sell level, okay, which means you don't buy, you don't sell across this level, which means you buy only below and you never ever sell below, okay, buy sell level, we'll call it, considering it that way. Okay, the equilibrium level in the range, okay, you buy only below, you never sell until you get above, okay, it's really all about that. So, of course, buying in terms of structure still means that we're in a range, possibly a trend following range. So considering this one as a second range boundary, not the type of stuff you want to buy, but the type of stuff you want to study. Okay, kind of looking at this, looking at how prices react to these things and letting you understand that what matters is how do we get there, so you will get the likelihood and probability to know which type of third range boundary you'll get. Are you going to get a neutral range boundary? Or are you going to get a trending range boundaries? All of those stuff depends mostly on how do we deal with the first or second wave structure. Okay, so that's what matters to you guys. Don't try to catch the bottom, but be smart enough to understand that this still matters a lot to you, because that will tell you what the fuck's coming next. Okay, but that's aside. In terms of daily candle, you would see that if we take the reference level I gave you so far, which is 34,000, which is the level in which we left some volume behind, and yeah, actually this would be it. Okay, so this is the level, okay, in which we left some volume tracks behind, leading me to believe that this is probably where we'll concentrate most of our ranging efforts toward putting a lot of volume around this level. Okay, I told you this range could last fairly longer than you think it is. I think March is a bare minimum, eventually even longer than that. We'll adjust as time passes. But, of course, if you would take this as saying, oh man, we've got a hell of a low shadow candle, so this is the bottom of our range, and we've already made the wave 1 to wave 2, which is, of course, possible, then in that perspective, you can consider shifting this level once again to the 50% of this range, taking high point, low points, and just basically taking the middle. So the fact that we see in here the current middle of the range, and of course, it's hard to say that we found the second wave boundary. You could definitely go one more time to the downside, okay? So you need to understand that this is ranging context. This is definitely the hardest thing ever to try forecasting, because no one the fuck knows what a range structure would be and can hardly assess where the range boundaries will be, specifically when it comes at looking at the first and second range boundary. The third one is the least risky one to deal with, okay? But still, if we consider this to be the 50% of our range, we could go right down to 26K, looking at the top we've made, and the middle level with volume being 34K, that means we could get down to 26K on the bottom. All right? That would be a 40% drop, and I think we can hardly go anywhere beyond that for multiple reasons. And I can hardly even go down all of those elements suggesting that 26K is, I've got a big buy order out there, and I don't nearly think we'll ever get there, because there is still so much demand into this market structure. So if we get there, there's going to be so much buyers, because most importantly in here we're going to get hell of a rebound, because there will be no one ready to sell but leverage traders being margin called. So there will be a shit ton of buyers, a lot of demand, very few sellers, despite guys who are over leveraged and will just basically be fucked up because they bought with margin calls. And that's pretty much all about it. So bear that in mind. But what matters to me, and like I said, I'm really scratching the surface. These are really complex patterns that I will teach only to the experienced guys. But this is what it is, okay? I've got, for now, an equilibrium level, 50% retracement on top to current bottom, okay? Which is standing on top of where we left volume behind. And that generally leads me to believe that we're going to accumulate a lot longer into the lower 50% of the range. Still probably put a lot of volume into 34K, but the 50% still remaining 36K. And in that perspective, that means our triangle will probably pretty much be asymmetrical, meaning that we're not going to get a triangle putting 50% of its price on top of the mid of the 50% level and the other 50% in the lower boundary. I think we're going to spend most of our time into the lower boundaries of this range, okay? That is something, like I said, I give you the conclusion. I can hardly go down to the entire explanation because I think this level is so much demanded that we're probably not going to get there. Okay, so that's pretty much all about it. Considering that this could be done, okay, but don't be dumb enough to go leverage right now. So that's the message. Don't try to catch the dip. This is a second range boundary. This is a red level trade. This is for experienced guys only. Wait for the goddamn third range boundary and only manage yourself to study this wave rather than going any way further than that. So if we get to study this wave, what's funny is that, as you can see, lots of lower shadow candles. And remember, lots of attempts of bringing down V-shaped reverse with volumes and stuff like that. So these are the attempts that the market made to get to print the fact that we were lacking of supply. Remember that when we rebounds like that, V-shaped reverse means lack of supply, not enough people selling coins for people willing to get these very fast. And that generally creates V-shape. And as you can see, we've made hell a lot of V-shape. One there, one there, one there, one there, one there. They all failed, which means the structure itself, without going down furthermore analysis, means that there is enough supply. Otherwise, we would have just made a single V-shape. So we've made several of these, and I tend to believe that this one, not necessarily going to be the bottom. I sincerely doubt this to be the low point. I think we're going to get back there again and work a shitload because, like I said, I think this is where we're going to put a lot of volume, okay? But still, you need to remember that currently you never ever sell anything until you get at least on top of 36K. So this morning will be the first sellable level, okay? And let me be clear, I'm not necessarily going to sell, but I matter looking at how prices will react into this first attempt today. I think they're probably going to retrace. Like I said, we're probably going to spend most of our time in here in this range, okay? So if you see reactivation to the bearishness today, looking back at yesterday's low points, Jesus fuck, don't panic. If you think we're going to V-shape reverse this range, you definitely got it all wrong. Because like I said, we're probably going to put a shit ton of volume in there. So the fact that we've made a lower shadow candle yesterday, if you got me right, means we're definitely going to get back there and make daily candle closes out there. So time is going to be a bitch. Be patient. But if you think you lost the bottom, well, man, we're going to get back there. So if you absolutely want to buy the second range boundary, and even if you're not even ready for it, if you meaning you don't have the experience to get there, but if you absolutely want to get in because you absolutely have no bitcoins and stuff like that, well, if you're buying today because you think you missed the bottom yesterday, shit Sherlock, you're really not going to the right place. It's probably going to get back there and you'll have plenty of time to work it around, so just be fucking patient. All right, I'll let you know when the appropriate timing to buy again will be there, and it certainly hasn't been yesterday. All right, that being said, that's pretty much all about it for cryptos. What the hell is going to happen with altcoins, I just goddamn don't know, and I actually don't give a fuck. Remember that to me, in my yearly plan, altcoins are the big question mark, but they mostly depend on Bitcoin building a range. So Bitcoin might be on the verge to do it, but we still don't know yet. It could be the chance in which Bitcoin just falls off the cliff and crash totally. So as long as we maintain prices on top of 26K, we're fine, and this pretty much looks like a range, but we need a third range boundary to confirm. So as long as we do not, don't overextend the reflections. Okay, on the opposite direction, until we get to manage building Bitcoin's range, don't give a fuck about altcoins, just let them digest. And the better they digest, we need to shrink volatility. Okay, remember that my personal favorite for Ethereum is to build a handle for a massive cup and handle structure. So in that perspective, look for shrinked volatility, lower volumes. So you don't want to jump on board for these guys, you just want to be freaking patient. Okay, so same conclusion out there for cryptos in general, whether that is Bitcoin or Ethereum. If you want to buy, just be patient. All right, so that's for it. Then USD WTI for experienced traders only, because reversal trade. We're getting into the reversal area. We've made a quick assessment yesterday, but I wanted to share it with the English community, of course. So this is our speculative area, weekly chart time frame, which means this is quarterly update context. Though we've got an entire quarter to get to find the short selling entry on USD WTI. Man, we're just the 12th of January. So, of course, we're getting into the speculative area, which means we're excited, we want to jump on board, but let's face it, oh man, we've got plenty of time ahead, and the early signals we've seen and we see on the lower time frame charts definitely suggest this is not going to happen today. So we need to be patient with oil. The signal will come sooner or later. We'll let you know. Of course, don't try to catch the reverse trade. Don't be dumb to do it. Meaning that if we get a reverse, we'll get a market top, we'll get a validation, you'll get a pullback to sell this guy with a third range boundary. So if you are not experienced yet enough to get for a reverse trade, just don't do it. Be patient enough. We'll let you know when the third range boundary can be traded, pure and simply. So patience is still key into these trading activities. Okay, so that's a matter for professional and experienced guys knows how to manage that. We're going to look for a daily signal because we always reverse trade on the shorter time frame. As you can see, we have an exit signal, but certainly nothing close to a validation, to a confirmation on price reverse. Still leading me to believe that we're going to get there, flush this exit signal, get back to the price in which it triggered, probably going to act as a support for those who sold too early. We're probably going to push to divergence in here, and that would be the signal. Okay, then we'll probably get the validation and the third range boundary for others to jump on board. Okay, so no rush with oil. No, all of the signals and the price action I see here just suggest that more patience is required. We're just going to work ourselves deeper into this area. Because the 4-hour signals we have, okay, remember that for experienced traders, this is the signal we want to consider that we got the top. This is the time frame we trade on. This is the time frame in which we look at early signals to adjust the risk limitation. And as you can see, there's nothing suggesting we have to rush our way in. More importantly, short-term signals just says this thing is probably going to keep on going. Okay, so that's it. Gold. Oh man, I like this big boy. I like what it's doing today. I just can hardly stress how important today is for gold. Because we had a hell of a drop, just like cryptos, basically. But as you can see, I've missed a shot in here for just a tiny bit. I was looking at slightly below prices. We still have a fairly positive context, positive trend channel as well, in a positive higher time frame context with a rising moving average in here as well. So this is just bullish all across the board. You know I don't want to sell this guy too soon. But I don't want to be too aggressively buying it though, because to me the 2000 area was hell of a market top. That's where I profit took all my physical gold. But that doesn't mean I'm not necessarily willing to buy again with derivative contracts, okay, with paper gold. So I'm still looking at it. What I like is just the fact that, oh man, this area is so much of a dense technical cluster. I wish I could have caught the bottom. I just totally missed it yesterday. I basically didn't even thought about looking at gold. So that's a big mistake, because of course yesterday gold made a lower shadow candle just like other cryptos. But what I like is that this guy could eventually build yet another morning star pattern just like this one, okay? And if we were doing it twice on a rising trend channel, on pulling back to this trend line, all of those things are just so fucking bullish that would be so great. So I'm hardly stressing that, because we're going to work with this all day long with the experienced trader, trying to figure out the probability of this morning start to show up and how much do we want to expose capital to this, or otherwise ranging into this area like in the noisy stuff, just like the cryptos, and eventually sooner rather than later we'll get the upside move. What matters to me is the fact that normally gold should give the signal prior than the cryptos. And if you say, what, Phil, the momentum is on the cryptos, so the cryptos will definitely break the resistance first. Well, no, they will not, for simple reasons. Cryptos have been going parabolic. They've been putting a fast forward movement into their prices, which absolutely isn't the case for gold. So gold has pushed further and faster in the past, but now it has hell of a mature range and it's ready to break a resistance. So I think gold will signal first to the upside. That's the reason why I'll be more aggressive into trading gold's range, because it certainly is much more mature than the one we're barely starting with cryptos. So I think cryptos have hell of a lot longer range to deal with than gold. So gold to me is the thing to go. So if you were looking at, oh man, I absolutely want to get into cryptos because this is where the momentum is no longer there. The momentum could eventually show up out there, but like I said, it's a very big hesitating area. So don't go bold, and certainly don't go in with a stop loss there. That would be absolutely dumb. Stop loss must be there, and we might be working around this area for a little while. But what I care about is the appropriate timing in which market reactivates. Okay, so we'll study this with the experienced traders today into the live room, but I'm not necessarily 100% sure I could make a live room with you guys today in English, but probably tomorrow. I'll try tomorrow afternoon. You know that every Wednesday, we generally do a live room session for an hour long, generally around the US Open time. The US market open. Okay, so see you guys tomorrow, and we'll probably get to talk about gold. All right, that aside, stock market, I don't nearly give a shit. I'll make a day-to-day trade, so it's more about sentiment as usual to me. As you can see today, the sentiment is still fairly much hesitating. It's not bullish, bearish, but the professional sentiment is still tilted to the upside. Yesterday has pretty much all been about going down and then going back up on sentiment. So retail traders are slightly getting into buying again, but not enough to really considering it as a reverse. So it's more like, I think right now in an intraday perspective, we can both buy and sell. Just be good enough to highlight your levels. Okay, so if you don't know how to do this, if you don't know how to short-term trade, just don't do it. I'm sorry, I wish I could just split myself into two people and handle the English community just as much as I'm handling the French community, but I just can't. So I'm sorry, I'm just a single person, and until then I'm just managing to spend my time where most of my users are, and most of the community is still French. So yeah, I'll do my best to talk about that tomorrow, and I'll let you know how to build your own personal day-to-day basis trade onto stock indices. Bear in mind that tomorrow we'll get the core CPI, and that's hell of a big motherfucking guy tomorrow. I expect the number to be totally different from that, but I just hardly can tell which direction it will be. Okay, so tomorrow's a big day, and we'll get to talk about that because we'll probably be live around this time frame tomorrow. Okay, so that being said, it's going to be it for today. So trade safe on crypto. Don't try to catch the bottom. We'll probably get back there, and we could eventually go right down to 26K. If you absolutely want to buy, you can put an order into the order books at 26K, just in case we get an ugly lower shadow candle and stuff like that. Remember that buying 26K can only be done without leverage. If you buy it with margin, just don't do it. Okay, buy with cash, no leverage, and only can be a slight reinforcement of your existing buy and holds if you have some. If you have none, then put a really tiny fraction of your capital in this. That's all about it. Bye guys.